So welcome to my channel. So in this video I will discuss postal test paper set number 1 cost accounting. Match the following. So historical costs, sunk cost, zero based budgeting, decision package, direct expenses, cost accounting 10, warehouse rent, floor area occupied. So margin of safety, total sales minus break even point sales, BEP sales, break even point sales. Next, choose the correct answer from the given all four alternatives. So choose the correct answers from the given four alternatives. So which of the following items is not included while preparing cost sheet? So which of the following items is not excluded while preparing cost sheet? So goodwill written off. So goodwill written off, provision for taxation, property, property tax on factory building, and interest paid. So here we choose what is the correct answer. So correct answer is C, property tax on factory building. Next, cost price is not fixed in case of cost plus contract, escalation cost, de-escalation cost, all the above. So we see the cost is no price is not fixed in case of cost plus contract. That is option we select A, cost plus contract. So equivalent production. Number third choose the correct answer. Equivalent production of 1000 units. So third one, equivalent production of 1000 units, 60% are completed aspects of. So multiply 100 into 1000 units, 1600 units, 600 units, and choose the option. So 600, option C we have here. Option C here. So we see here option C. Next, fourth one, fixed cost is 38,000 and PV ratio 20%. Computed break even point, that is 16,000, 1,60,000, 1,50,000, 1,55,000, 1,50,000. So break even point equal to 30,000 fixed cost divided by PV ratio. So fixed cost divided by, so formula I apply fixed cost divided by PV ratio, that we call 20 into 30, that is equal to 1,50,000. So option is C, B. Select option B. Like this we practice. The difference between standard cost and actual cost is, difference between standard cost is actual cost is wastage, B loss, C variance. So C variance, D is a process. Option C is the difference between standard cost. So a standard cost minus actual cost is variance, that is equal to variance. So SC equals to minus AC equal to V. So this is the difference between standard cost and actual cost is equal to variance. So next last one. Next one, which of the following is considered as a normal loss of material? Which of the following considered as a normal loss of material? So here we see here which of the following is considered as a normal loss of material. So cliffage, loss due to accident, loss due to careless of handling material, loss due to the careless of handling material is, and last the D1 is D, none of these. So option D, none of these, because normal loss is when considered pre-phrase loss and loss. When two options is given, we choose none of these. Which of the following is considered as? This preposition is very remember it. Considered as normal loss of materials. Considered as normal loss of material. Loss, and whenever this choose the correct answers is given, we see here options and select none of these. In case of no, don't given the phrase and loss due to accident, so select after on that loss due to careless of handling. So which of the following is considered to be so considered to be normal loss of material? In that case, loss due to be handling of material. So I repeat again, which of the following is considered as a normal loss of material? In that case, we select none of these. So next, so joint cost is suitable for. So joint cost is suitable for. So joint cost is suitable for infrastructure industry, armament industry, oil industry, so fertilizer industry, whichever is correct answer, we choose it. So option oil C is the right answer, oil industry. So sixth one, joint cost is suitable for oil industry. So next, eighth one, standard deals with the principles as and methods of determining the manufacturing cost of accessible goods. So cost of accessible goods is cost accounting standard no. 2. So manufacturing cost deals with cost accounting standard 22. So cost variance is difference between standard cost and actual variance. So standard cost and actual variance. So C, standard cost and actual cost is the variance. So cost variance is difference between, we already discussed here, difference between standard cost and actual cost is so variance. So here same. So cost variance is given. So we calculate cost, standard cost minus actual cost, standard cost minus actual cost. So option C. Next, here we see if the sales are 1,50,000 and variable costs are 150,000, compute the profit and volume ratio, that is equals to, choose the correct answer. Choose the correct options here. So profit volume ratio equal to contribution divided by sales into 100, that is 1 lakh divided by 1,50,000 into 100, that is 66.6%. Contribution equal to sales minus variable cost. When we get apply formula, we get 66. Option A. Select A. Next, we move into the next topic. Here, fill in the blanks. So, fill in the blanks. Cost, stores ledger is kept and maintained by dash. Stores ledgers and kept and maintained by store cost accounting department. Stores ledger is kept and maintained by costing accounting department. So cost accounting department. Penalties and damages paid by statutory authorities shall not be form a part of direct expenses. The main dash product is generally created sale value, that is then by the main product. The method of costing used for undertaking like gas companies, cinema houses, hospitals, etc. known as operating expenses. When sales are 30,000, variable cost is 1,80,000. PV ratio will be 40,000. Apply just previous formula, previous this one, and apply here formula, we get 40%. Option fill in the blank is 40%. Next, state the whether following statements are true or false. Cost incurred prior to split off point are known as joint cost. True. Job costing is applied in all concerns, small concerns. Job costing is applied only in small concerns. False. Standard cost once fixed cannot be altered. True. So to achieve the anticipated target, planning and coordination and control the important main task is true. Traveling expenses to site is a direct expenses. Traveling expenses to site is a direct expenses. This is the section true A, section A. Next, move into the second question here. Second 2A. A contract has undertaken the construction work at piece of 5 lakhs and began the execution of work of 1st January 2015. The following particulars are given. Particulars are of the contract up to 31st December 2015. So given here, so particular machinery 30,000, materials 1,70,698, wages 1,48,750, direct expenses 6,334, uncertified work 9,000, wages outstanding 35,380, value of plant 22,000, and overheads 8,000, 2250. So material returns, one materials returns 1,198, work certified the 3,90,000, cash received 3,60,000, and materials as on 31st 12,2050 and 33,766. Next, some paragraph is given. It was decided that the profit made on the contract in the year should be arrived by deducting the cost of work certified from the total value of architect's certificate, that 1/3 of profit. So arrived that should be regarded as a provision against contingents, and the provision should be increased by taking the credit profit and loss of such portion is 2/3. So 2/3 of the profit as a cash received to the work certificate. So contractor को so materials. So materials given. So materials total expenses before. So first we calculate, subtract debit side, credit side before calculating total profit and reserve. So we got total cost is 56,450. 56,450. Alternatively, total including work in progress. Total in work in progress. So add it 42,542 lakhs. Sorry, 4,25,864 minus 3,69,440. We got 46,450. So like this, we also apply. Now we calculate work certificate cash received divided by. So 2/3 of profit will be taken. Balance. So reserves. So transfer to the reserve. Okay, problem is clear. Next, from the following particulars with the respect of particular ordering quantity. So given here ordering quantity, delivery cost per system. We see here this is 1. So purchasing cost, annual demand. So is given here. Total inventory. Trade. Annual demand is 4,000. So annual demand is 4,000 tons. From the following above computation, the best quantity in order to is 800 units. The new enterprises limited 3 producing departments A and B SC, 2 service department and A and B. The following acres are extracted in the following giver. So rent and taxes. So this is the question that we refer to the download for postal test papers and refer and follow the answer. So I will carry the statement showing the appropriation of overheads of the department, rent and taxes basis total. So calculate. This is also like the institute problem, material problem. Given rent and taxes, so how to calculate? You see here, rent raise floor area square meter 2000 divided by 1000 into 10, that is 10%, 0.4. So after that we get 4.562. So same apply here, apply apportionate, and then we see the repetition distribution. So take into the consideration. You see the institute material follow, and then we calculate factory cost. That's enough. Simultaneous equation method is not given. So next, fourth one, workman. These are next list out here is six functions of so list any 6 functions of cost accounting standard board. Will refer to this material. So refer to the theory question. So we need to refer this institute material. So but workman particulars, grade or working on 8 hours shift day. So this is also institute material. Safe. So as a sake of yourself, I will show you the problem number. A workman of a particular grade working on 8 hours of hours of shift duty or guarantees wages of rupees 32 and in 32. Just a second, I will show you in the institute material. Question number 13. So question number 13. You see here question number 4a. We select 4a. So question number 4a. Workman of a particular grade working on 8-hour shift duty or guarantees a wage of rupees 32 and incentive scheme is in operations according to which the production bonus is earned directly proportional to performance but only after 100% performance is reached. Four workmen A and B and C and D produce 60, 75, 90 units respectively in 6 hours, working on a job which has standard time of 6 minutes per unit, 6 minutes per unit, which unit has measured work content remaining 2 hours of the shift as spent in doing unmeasured work which one no incentive bonus can be paid. Find for each workman the production performance level achieved and we calculate total earnings per day. So this is the question. So statement showing the computation of performance achieved and total earnings of four workers. Total earnings of four workers, particulars A and B and C. So total work if kind of performance level achieved. So computation of performance we need to calculate production performance level achieved. So performance achieved and total work earnings for four workers A and B C. So standard output. So here we are given 6 minutes, 6 hours. 6 hours working in a job, so 6 hours. So A is 60 divided by 6 hours, 60 by 6 by 6 minutes, 6 hours, 6 minutes, standard time 6 minutes, 60. So 6 hours, 60 divided by 60. So calculate all are 60 minutes, one, okay. Actual output, so actual output is given, actual output 48 and then 60 and then 75 and then 90 units. This is the standard output for the 6 hours. So 6 hours divided by 6, each is 6 hours, each has 6 minutes. So per actual output is given 48, 65, 75, 9. Performance level is, so A is 80%. So A is 80%. So how to calculate is 60 divided by 48. So performance 80% and after, so here we see here performance but only after 100% performance reach for 4 workmen A and B C produce 60 and 48. So 48, 65, 70, 75, 90. So here we see calculate second performance level, we calculate 80%. So he applied 6 hours, so produce 6. So we calculate performance level. I will show you here performance level. So calculate how to calculate performance level here. We have better idea. So performance level calculate. So performance level. So total hours. So total hours is produced. So total hours produce how much? That is 6 hours. So A produce 48. So 48 divided by 6, that is into 100. So we calculate percentage like, so we calculate percentage, that's why we calculate 100. So 48 divided by 60, 38 by 6 hours into 100. So 6 by 48. So percentage 10, calculate 10. So 48 divided by 6 into 10. So 100% no, so we got 10. So into that is equal to 80%. So same again, B also 60%. So 60 by 60, that is equal to 100. That is again 75 divided by 6, that is equal to 125. So 75 divided by 6 into 10, that into 10. So into 10 we got 125. Save C, D again. D how much? 90. 90 divided by 6, that is equal to into 10, that is equal to 150. So multiplied. I hope you really understand. This is the performance level. In case we need to take the percentage. So how for this performance level. So level for the 100% respect performance is reached. So that's why we calculate propositionally. So bonus we calculate earnings. So wages for measured work. So 6 into 4. So 6 into 4, 20 wages for measured work. So 24 6 hours we have measured. So 4. So 4 members. So calculate 4 workmen. So we need to, that's why we calculate 4 after reaching the 100 level percentage level. So 6 into 4 workmen. So bonus to wages measured 6 into 4. So 6 hours each have 4 members. So 4 members performance 24 24. Next C bonus 24 into 25% because is excess performance. So because he reached the performance level is over 100. So over 100% reached 4 work A and B, C, D produce 8 and 60 and 70. So respectively 6 hours. So 24 hours per day. So we need to calculate 25 wages per hour. 6 hours into 4. 4 workmen. So 4 workmen we calculate. 4 hour, 4 hour. So bonus we got 6 into, so 25% extra, so 50% extra is the performance. So that's why 6 into 12. 24 into 25%, that is 6. And the total earnings for 4 and 5 and A. So total earnings equal to 4 wages, bonus and wages for unmeasured work. So unmeasured work means actual output into wages per hour. 24 2 into 24, that means this actual output into, so actual output into, so actual output into wages measured for work. 2 into measure 4 workers, how much? So 4 workers, so 2 by 48 8 2 into 4 2 into actual output for performance level 24 8 So total earnings 32 32 38 34. So total earnings for so 24 plus 8 34 24 32 24 plus 8 equal to 32 24 plus 6 38 24 plus 12 plus 8 at 44. This is the cover. I hope you love us. 4 workers to achieve the 4 workers. So clear? So what are the fifth A? What are the requirements? So what are the disclosure requirements for cost accounting by direct expenses limited to refer to study material? This is the fifth A, fifth B. So this is also I given. In the meantime, I switch fourth B. So fourth B, a transistor manufacturer integral accounts transistor. So this is the fourth B question in this set number 1 for the postal test papers. So a transistor who is commenced his business on 1st June 2017, suppliers you follow the information. So this is the given here. So we see this is the problem illustration 17 for the examination for postal test paper question given. This is the fourth B. Fourth B. So fourth B question, a transistor manufacturer who commenced his business on 1st January 2017 supplies with you with the following information and asks you to prepare a statement showing the profit and as per transistor sold. As per the transistor sold, wages and materials to be charged of actual cost, works overhead is 75% of wages and office overheads at the 30% works cost. Number of transistors manufactured and sold during the year 540 was 540. Other materials sold for 240, 80, 60. If the actual was 32,000 and expenses 61,800. Prepare reconciliation statement. So reconciliation statement. So see here materials. So materials 240 into 540. We see 1,29,600. Same wages again 8 into so 8 into 540. See and then we see here 740 75%. So wages. So like this total cost 600 is given. So profit equals to sales 32,000. So next trading and profit and loss account. So see here. So institute material trading and profit and loss account by sales 3,32,400. So this is the problem. Free statement of reconciliation. So 57,240. 57,240. So this is the given. So this is the fourth B. Our next fifth question B. This also got the given in the institute materials. I show you. So illustration fifth question. Here we see illustration 5B in the postal test papers. So we see here same question. From the following data, from the data given below, calculate material price variance and material usage variance and material mix variance. So raw material A and B and standard output and actual output is given for 40 units at the rate of 50 per unit. 60 units, so B 60 units at the rate of 40 per unit. Standard actual units 50 units at the rate of 50 per unit, 60 units 45. So this is the given solution. A and B actual quantity price value is, so first multiply. So computation for required value. So SQP. So standard quantity cost, standard cost of standard material is 4,40,000 4,400 and revised 4,840 and actual output cost next AQSP. Third one is multiply. So we see here I will multiply. So 48, 440 is given. Sorry for that. Take for 450 and revised quantity 40 by RSQ means revised quantity. RSQ means revised quantity. So revised standard cost of materials. So revised standard cost of required values. So actual material 5200. So 5200. So now you calculate variances. So variances follow this 1, 2, 3 material mix cost variance. 1 minus 4. This is the formula. So I will given here. Understand. So computation of material required variance. So refer to the institute material page number 409. 409 fifth question. Okay, clear. So this is the postal test papers. Answers is given for brief explanation. 4,400. So actual 8,800. So 8,800 A. Next question, we move fifth B or next sixth A question is given. This also. Next, a product or process. There is a process costing. This also is given. Institute material process costing. So process costing. I will show you. Vegetable oil manufacturers companies split off oil. So this is the question regarding the sixth question A in the postal test paper, question illustration number 26, 6th A. So this is the 6th A of production of the postal test papers. Okay, a product passes through three processes. So 3A and BC units is given. Cost rupees 1 to 1 rupees 10 paisa were issued. Process A. Other direct expenses are as follows. So 1, 2, 3 process is given. So wastage as product 5,000. So calculate. So units into 500, the subtractor like this, wastage you calculate 5% is wastage, so 500, so 9,120. So 9,120 is the wastage calculations. So the process is same other than, so calculate same. So refer to the institute material 5,283 and then working notes is given, some process C and then 760.60 percentage of normal wastage is 7,063%, 7,063%. So this is the sixth question B is covered. Okay, 7,633%. So next. So seventh question A, B. A factory is currently work 40,000 person capacity. In the meantime, the questions is given. What significance? What is the significance of operating costing? Distinguish between. 7th A question, distinguish between. 6th B, what is the significance of operating costing? So theory is not relevant here. So distinguish between absorption costing and marginal cost. So any doubt, comment below, I will refer to it. Next 7th B question, the A factory is currently working to 40% capacity. This also the is given in the institute material. So selling price factory. So I will show you here. So question number 5th, illustration number 15. This is the 7th B question. So follow. Most of the questions are given in the institute material. So refer to institute material and given and follow the institute, the clear examination. No need to worry about that. Examinations. So just practice practical problem one by one slowly. If any doubts, comment below. I will definitely help you for you. So this is the factory. A factory is currently working at 40% capacity and produce 10,000 units. At 50%, the selling price falls by 3% and 90%. and capacity and selling price falls by 5% accompanied by the similar fall prices of raw materials. Estimate profit of the company at 50% and 90% capacity production. Okay, the cost of present per unit is given: material 10, labor 3, and overheads 5%, 60% 5 on the 5 rupees, 60% is fixed. So selling price per unit 20 per unit. So statement showing the profit, computation of profit, as well as capacity 90% as well as current capacity we need to find out here. So selling price is given, so 20 into units multiply, so 20 into multiply, that is 2 lakhs. So same again 19 50%, so 50%. Selling price falls after by 3%. So next 50% we get 40%, as it is 2%, next 5%. So understand the question, that's enough. 50% 119 40 and like this. So 90% on calculate. So at 90% capacity, the selling price falls by 5%. So selling price fall by 5%, accompanied by selling price by 5%. So 20 into 5%. So 1, that's why 19 here. So 4017 multiplied by 10,000 units. So we get 4,27,500. So where variable cost, selling price minus variable cost, we got break even points, break even sales, that is fixed cost sale. So we multiplied. Clear? Understood? I hope very. So that's all. This the question 7th B. Multiplied variable cost 5%, so fixed 6%, variable cost to 6% is fixed. So 2, so here we 2 category. So 60% already fixed, we no need to invest, only 5% on 60% into, that is 3. So remaining 3 is a fixed, so 22% will 2, that is taken 2 overheads. So 2,000, 2 into 10,000, 2 into multiply units into rate, multiply total, we got on the contribution. So 15, contribution 5, so selling price minus, so 15 minus 20, that is equal to 15 units 20, the already selling price 20, the variable is 20, we got 5% is 5 units is a contribution. So same again, I clear. Fixed cost is given, so profit same, calculate like this. So practice. Understood? If any doubts, comment below. This is the contribution. Selling price minus variable cost equal to contribution. So we got fixed cost is 3 plus 3 into 3, that equal to, here we will, so in on 15% no need to given. So fixed cost overheads 3 first unit 40% only is given, so because it is fully at capacity. So 5,000 4,050 on 19 into 60%. So 5% overhead fixed, we calculate 4.4%. So contribution, so like this, fixed cost, so 3 into 3 30. So we calculate 30,000 fixed, subtracted 1,50,000 divided by contribution, we got subtracted fixed cost equal to 30,000. So selling minus 2,50,000, 50,000. So 3 into 30,000 fixed cost. So 30,000 fixed cost, 30,000 is a fixed cost. Okay. Profit is 20,000 again. So 50,000 with 30,000 20 and 35, and then 75,000. So cost is break even points, fixed cost into selling price divided by contribution. So we can multiply you get this result. So you get result. So this is the questions. This is 7th B question. And last but not least, we conclude this video. Write short note on the following. This is the theory questions. So master budget, refer to the budget and budgetary control. Cost center, refer to the study note number 1, and port sector, refer to the operating costing, advantages of job costing and limitations of standard costing. This is the questions given. Write any short note on the following. So that's all that conclude in this video of postal test paper set number 1 in respective of cost accounting cost accounting postal test paper set number 1 finish. On this video we see in the study note number 8 postal test papers set number 2 will continue in the next video. So unless stay subscribe and hit the bell icon for more updates. Thanks for watching. Jai Hind, and be CMA, always be CMA. Thanks for watching. Jai Hind.